Good morning, afternoon, and evening traders from around the world. I hope you are all having a fantastic week so far in week 47, and you're ready to rock and roll into week 48, or, well, maybe you're going to be taking the week off going into Thanksgiving. First things first, before we take a look at any of the charts and all that fun stuff, we got to see what big things are going on this week. News, events, holidays, etc. So looking at the holidays, obviously the big one is going to be Thanksgiving. That's going to be Thursday, and realistically, a lot of traders will take this entire week off. Most traders might, if they are going to be trading, might come in on Monday, maybe Tuesday if they can roll out of bed, but that's when things die off a lot. So I'm not really anticipating a whole lot. But there are a few caveats to that. Keep in mind, everyone has already been home with all the stay-home orders and all of that when the world's falling apart. So a lot of people already have trade accounts. And, well, when everyone's going to be back at home and everyone's already got trade accounts, we might actually have some pretty good volatility. So this week might be a pretty good one to at least keep your eyes on. I know for me and everyone here at SSFTG, we're going to be kind of taking the week off. I'll be keeping my eyes on it, of course, but there's not really going to be anything going on this week aside from the weekly brief, just mainly because we're not going to be trading. So it's kind of a calm week. We'll see if we can get some maybe bonus material and things like that going on just to keep things interesting. But with the holidays and stuff, again, keep that in mind as we're going into the news calendar. So with Monday, we have news at 9:45. That's the Flash Manufacturing PMI. That's forecasted at 52.5. And the Flash Services PMI forecasted at 55.8. And that's it for Monday. As far as Tuesday goes, the only big announcement is at 10 o'clock. That's a CB Consumer Confidence forecasted at 98.3. And then we go on to Wednesday. Wednesday is a brick wall of news because they had to kind of pack everything in ahead of the holiday. So we've got the preliminary GDP at 8:30, that's forecasted at 33.1%. Unemployment claims also at 8:30, forecasted at 733,000. At 10 o'clock, we have the revised U of M consumer sentiment forecasted at 76.9. 10:30, we do have the crude oil inventories. It's Wednesday, and although they don't mark it as a big announcement, if you're a crude oil trader, 10:30 on Wednesday is a pretty big dime to keep your eyes out. Previous was 0.8 million on that. Natural gas inventories at 12 o'clock because they got to pack it in ahead of the holiday. So keep that in mind there as well. At 12 o'clock, that's 31 billion previous. And then at 2 o'clock in the afternoon, 1400 Eastern, we have FOMC meeting minutes. So if you really wanted to make Wednesday an interesting day, hey, why not pack everything in on that day, including the FOMC meeting minutes? That's going to be a big one. And then, of course, we go into Thursday, bank holiday, and Friday, well, some people might be there and everyone else might be in a turkey coma or whatever kind of coma you have after you have your personal Thanksgiving. But Friday is going to be up in the air. We'll see. Again, this week could be very, very interesting, but that's, we're just going to have to wait and see. This one's really up in the air. Typically, we don't go into holidays like that, but with everything going on, man, I'm kind of excited, not going to lie. All right, well, now with the fundamentals out of the way, we can dig into some charts for week 48 ahead of us. That's going to be from 11:23 to 11:27. All right, so first up on the list is going to be the NASDAQ, and the NASDAQ overall has had, we had that really, really nice pop above the highs going into the 12,000s. It was a great breakaway run above 12,000, and then just got slammed right back down. Now that it's come time to try to get something going again, we're not really seeing any follow through one way or another. It's very sideways, very choppy. It seems like maybe at first we were trying to get a bull flag, but then the bull flag sort of failed. They're trying to get it to go back up right now, but then they've got this falling resistance to contend with. We've got a new wedge on the top. It really depends on where we're going to open up tonight at 6 p.m. Eastern to see kind of where things are. If we're opening up here and they're gapping above all of that resistance, any shorts who were in are now stuck, and we're probably going to have a short squeeze right back up towards the highs and maybe even a break above 12,400. Maybe we can start rallying back to all-time highs again. Other side of the spectrum, though, if we gap down, this is where things get a little bit weird, because if it does gap down, technically it depends on where it gaps down to. So if we gap down into this range from around 11,800s or so, that was where a huge amount of support has been shown before. And if it opens up around there, we're probably just going to see the buyers rush in on a fire sale and pop it right back up. But if we start opening up below some of that, right, if it's opening up down here, then we could be running into a situation where realistically we might see buyers initially attempt, but if they can't break back through that support now resistance, then that could shut it down all the way back down to the lows of the wedge, where then we'll, maybe start finding some on sale buyers looking for some good prices. But where we are right now, we're still skipping across the top of the wedge, and this is by no means a great spot to be. Would be preferable to see, again, a gap above this to get things going back to the highs of the channel, and then we might be back up towards 12,500s. Or are they going to gap down and start failing back down towards at least 11,500, potentially fill in all of that support back down to the low 11,000s, get some of that fire sale action going on. Next up, we've got the S&P, and the S&P, although in a very similar situation to the NASDAQ as it has been for the last week, we've been talking about that a lot in the daily briefs, we're seeing a lot of similarities, but the S&P seemingly is more aggressively bullish than the NASDAQ. The NASDAQ kind of had its time to shine, and don't get me wrong, I mean, it's still moving phenomenally well. It's an amazing market. But the S&P seems like it's playing a little bit of catch up now. The S&P is a lot more bullish than the other markets, and maybe not the Russell, but the S&P is doing really well. We've got a lot of good continuation. It's holding higher lows, higher highs. We're not seeing as deep of pullbacks, and this is the first time that we've really shown any type of consolidation. And this consolidation is showing one really important factor, and that would be a negative divergence, where the MACD in this case is making lower lows, but price is making higher highs. And typically, higher lows so far. That would dictate, or at least give us a clue, that buyers are potentially coming in saying that, you know what, this is actually a good enough pullback. There's enough momentum in this move down that buyers are buying in aggressively to try to hold it as a higher low. And as long as we're holding higher lows here, but then lower highs over here, that's giving us a clue that something is potentially changing, right? We've got lower lows, higher lows. Something is breaking down, and buyers are trying to take back over. So if we can see the buyers begin to crack back up towards those 3600s, then they've got that shot at continuing back up, maybe towards those highs once again. At the moment, we are wedging, and it really depends on where the market wants to open up, like we were talking about in the NASDAQ. So similar game plan here, where if we're opening gap down because the S&P is showing so much more bullishness, will be likely, at least, in a zone of support, as long as it's gapping into here. And into here being around above 3,500 realistically. And as long as we're holding inside of here, buyers will be coming in looking for a continuation back up. That's a nice sale price on a false potential break low of a wedge in a very strong up move. Buyers will be looking to buy the dip. But if we start opening up down here, that's where things become a little bit more interesting, because now we're opening up underneath all of that support that buyers really wanted to utilize. So it's going to have to work back through all of that in order to get back up towards those highs, which it's definitely possible, but it's going to be a lot more difficult to do. It's going to take a lot more effort. So buyers are really hoping to open, gap down in here. If they're opening gap up, might actually be kind of a problem. If we're opening up right at the top of the wedge, that could cause some issues. I think a really nice location would be opening up gap like right into the top of the wick here, where there's just not much else to hold the sellers down or out of the way. So buyers can charge and they can slam into the highs and get the breakout move. So if we're opening up into the 3650s coming into, the Sunday open, then we've likely got a lot of bullish continuation. Maybe a bit of a breakout pullback to the wedge for continuation, but either way, buyers will be interested if it's opening up there. Buyers will also be interested if it's gapping down here, but if it gaps down here, then we've got some issues to potentially pay attention to that might cause some problems for buyers, and sellers might be looking to take over. Next up, we've got gold. And gold is very sideways. We're not really seeing a whole lot from gold. One of the big things here is when we zoom in, we can see that this big giant bear bar, like we talked about last week, like we've been talking about really all week, it's creating a zone of support and resistance. The bottom of the bear bar, and it's not like the market's gotten up there, but eventually when it does at some point, that will probably be an area of resistance. The bottom of this is becoming a major zone of support. Not just the first time around, but now we've got the second, then we've got a third, then we've got a fourth, arguably you could say a fifth on that little wick right there, and a sixth, and a seventh, and an eighth. We're showing a lot of support down here. So buyers are obviously interested down in the 1850s. That said, there are a couple things here. When we zoom out a little bit further and we look at the bigger picture, we can see this is a wide open door, right? If the buyers can't hold this zone, and it's a wide zone, right? So they've got plenty of room. Even if it opens down here, they've likely got until like the 1800s. Plenty of room to go. But if the buyers don't hold around those 1800s, then it's a wide open door until low 1700s. And that, I mean, 1,000-point drop underneath that becomes a little bit of a problem. And if the buyers can't hold there, then they've got all the way down to the 1600s and then down to the 1500s. You can see it's moving in those $100 chunks. So where we are right now with the 1850s, it's all fine and dandy, and realistically down to the 1800s. We've got all the way through here, maybe a possible larger wedge bottom setting up a nice zone of support there. But if it begins breaking down through that, we've got some problems. From the larger perspective on this point of view, could be turning out to be a larger channel instead of just this wedge that's going on. We are obviously looking for some support here. There's a big zone of support all the way down to 1800. But, you know, again, if they start breaking through that, there's not much left to hold them up. So this is where buyers need to hold it. And if we're looking in the nearer term, it'd probably be easier if I just zoom into the chart, really, buyers don't want to see the 1850s lost. With this amount of support here, if it does break down, they want to see it snap right back up again. So where we open up is going to be very important. If we open up right on top of that support, that's going to be a fire sale area for buyers to slam the market up. If we're opening up here in the 1890s, 1900s, then we're sitting right on top of resistance. And any buyers who were long, seeing as it is a range, right, buying the low, selling the high, we're going to be right up at a profit-taking area. And that may cause some issues for the bulls. They're going to need to work through that. Now, the nice part is, if we open up above that, if the market's going to be opening up above like 1910s, there's nothing, right? There's nothing until 1960. It's a wide open door, right? Jump right on through. So that's kind of what the buyers are hoping for, is a big, wide open gap all the way up to the 1910s or so, and then just rip the Band-Aid off and let the thing go sailing all the way back up to 1960s, maybe even the 2000s. If we start opening up underneath the 1850s into the 1840s, 1830s, that's obviously a massive problem because then we'll probably see a slide down to the 1800s. And if the 1800s don't hold, that's where big problem number 2 comes in, where we start sliding down to the 1700s, et cetera, et cetera, et cetera. So it's a very, very interesting zone here. From the bigger picture, it looks like a descending wedge, and that descending wedge is trying to hold some completion. It's so shallow, it won't even let me draw it. Try draw from the closes. There we go. It's so shallow that it won't even let me draw it, so I got to draw it a little steeper. But it's creating a zone of support here that's huge, and if that starts breaking, man, that's going to be a problem. So buyers want to see this thing ripping higher, and if the bigger the gap up, the better. Really is kind of what we're looking at. Switching gears over to crude oil now. If you haven't done so already, make sure that you have rolled over the crude oil contract to the 0121. That's where the volume is trading, rolled over this past week. And looking at the overall movement, What movement, John? The market's very sideways. We started off very, very range bound, got a little bit tighter inside there, tried widening out, but then constricted, tried widening out, then constricted. We're just in a giant range, right? We're not really moving one way or the other. And from the range perspective, it's very obvious there's a midline in there. The market tried breaking below the lows and completely and totally failed. And with that massive failure on the lows, naturally, the next expectation is for the market to go back up towards the highs. So that means that I'm looking for above 44, going into the 45s, maybe even into the 46s. Now, where this market is going so far, the big zone of congestion obviously is 44. There's a lot of crap around there. 44, 43, 50, anywhere inside of there has been a mess the last time the market's been there, and that's kind of where we've already pinged off of. So it wouldn't be a surprise to see it go above 44, start charging into the 46s, but it also wouldn't be a surprise to see it get really, really stuck in those 44s, maybe for the rest of the week. I obviously hope that's not the case, but maybe, if I'm not going to be trading this week, I kind of hope it puts it on pause. I mean, we can come back next week, Monday, when things are ready to rock and roll, but realistically, this is just a giant range, and we're getting close to the highs of it. It's tough to be a buyer up here without having to risk a lot. That does mean that your probability is really high. So your probability is really good, right? I guess that's the trade-off, but the problem is you're risking all the way back down to like 32. It just becomes not worth it anymore. So buying way up here, it's definitely possible, and maybe shorter term scalpers looking for breakout moves, I could definitely see that, but just be careful around those 44s. And if the market wants to pull back a little bit more, deeper moves down into the 38s, then you've got my attention. Now, depending again on where we open up, that's going to play a big role in this. Because we are very, very consolidated here. There's a huge amount of constriction going on, and it's right on top of 42. So if we're opening up right at the top into the 43s, then they've got a chance to try to break out or fail. That's going to be a teeter-totter. There's a lot of support and resistance around there, and it's going to have to make a decision probably pretty quick as soon as it opens up. If we open up around the 44s or a little bit further up, we've got a lot of room to potentially go a little bit further, maybe up towards those, getting back up towards the 4450s, trying to get that break up towards those 46s, that shorter term move. Now, if we're opening up down here into the 42s, that's potentially sale zone, right? Buyers might be buying into that, might even be buying down into the 4150s or 41s. This whole area is going to be a zone of interest for buyers to try to pick it up. If we open up outside of the wedge, right? If we're opening up sub 41, we're in the 4050s or even 40s. Buyers may still pick that up. That could be a zone of interest on a nice little pullback. They tried to break out of the highs, it pulled back. But, right, the caveat, they tried to break out of the highs, and a gap down here around the 40s and lower, we're now starting to gap underneath a big 10 number, right, 40s. We're also showing proof that it might be a failed breakout on the highs. That's not good. That's where we might start seeing those buyers giving up and the market selling back down towards the low 38s, maybe even 37s. So it really depends on where the market opens up here, but we've got a lot of potential plays to go into the book for crude oil this week. Over on the euro, which is just a gigantic range and is doing not a whole lot of anything, really. The big thing here is we've got the euro obviously constricting. We tried to get that double breakout earlier in August. It failed. With a double breakout failing, typically when they fail one side, they're going to test the other, and that's what they did. They broke out through the lows through September and then failed down there, rolling into a higher low, higher high. Sellers tried taking it back with that just massively vindictive trap right in the early part of November and just went screaming back to the upside. That gives us one big clue. Sellers got stuck. And not only did sellers get stuck, they had a huge bear bar to get stuck on. Sellers will have shorted that, and they got stuck there and have been under pressure ever since it happened. But along with that, buyers who were long, right? Whether they were long here or long back here or over here or up here, it doesn't matter. They might have moved their stops, and very likely, not just might have, very likely moved their stops underneath that low. We've all been there, right? You get stopped out to the tick just to see the stupid thing reverse and go screaming back up to the upside. We all know that pain, trust me, right? But when that happens, that creates another scenario. Buyers feel pressured, right? They're like, oh man, really? They took me out to the tick and now it's screaming higher. Like, man, I knew it, euro. And then they start chasing it, right? So you get that aggressive pullback that ends up getting chased into, and buyers buy a little bit more heavy-handed looking for that continuation up. We haven't had that breakout yet, and that's the big key. We're starting to form potential falling resistance, rising support, little bit of a wedge. Market is trying to break out to the upside. We've already cycled off of the highs down to the lows, and they failed to continue through the bottom. That's a huge clue. The next natural objective is going to be back up towards 1.195 to 1.2. Big, gigantic psychological level, right? That's also the last time the market had trouble. What a shock. So that's going to be the major objective. And again, here, it really depends on where we're opening up as far as the game plan goes. If the market's going to be opening up without much of a gap, then it's basically just play it like a range, right? Buy low, sell high. I'm not interested in doing anything in the middle. And obviously the market wasn't interested in doing anything because it didn't do anything. Now, if we're opening up down towards that 1.179, 1.18, we're at the bottom of the range, and it's a possibility of a shorter term range breakout that's likely to fail. Buyers will be very interested down here, all the way down to the 76s. Right? But if it starts opening up down below that, 74, 73, 74 might still be okay, but like 73, 72, you're starting to lose some big ground. And then we might end up seeing them flush back down to the lows towards those 166. That's going to be the big area that needs to get defended in that case. If we're opening with a gap up, but it's mild, a weak gap up to like the 18s, 18.8s, 18.5s, somewhere up here, we're right at the top of the range. That's a bad spot to be opening up. Probably going to sell off and look for buyers to buy the dip. But if it's opening up towards the top 9275, same problem, right? We're at the highs, but it's a teeter-totter. The buyers have a chance to get that breakout move going. If they can't get it going, if they can't stick that landing, then they fail back down to the lows. And then if we're opening up gap above that, 1.94 might not be high enough, but 9.5, 5.5, 6s or higher, then they've got a shot at breaking out above the 1.2s, or at least reaching out to the 2s and trying to grab those 202s back to where we had that previous high. So we've got a couple different plans of action here. Just depends on where they want to open up going into the weekend, going into the week rather, and seeing, kind of what they want to do with the euro for the holidays. And then over to the rocket ship that is Bitcoin. Man, oh man, what a rally to the upside. We still have our lines from when we were looking at it back in the 12,000s. Wow, that was a while ago. Actually, it wasn't. That was only about 3 weeks. So Bitcoin is obviously just screaming higher. And we're coming into some... Again, we're getting near those all-time highs, and this is where things are going to get really interesting. The big zone of resistance, we're sitting on top of 18,400, and the market is obviously having a little bit of trouble trying to break above it. But when it came down, it was a big washout right down to the previous major zone of support, which was obviously a major zone of support. And it just got gobbled right back up. And now we're off to the races. Beautiful inside bar trying to break above it. I mean, man alive, bulls are really trying to scream this back to the highs. And if we can start triggering back into the 19,000s, then we're pushing into that really close to all-time high territory where if there were some stuck buyers that were stuck at the all-time highs from before, I guarantee you they were. And I guarantee you that there are still buyers who are stuck from there, who are still holding, waiting for it to come back to break even. That's going to be the pinnacle zone of interest. Are they going to break through that break even, or are they going to get out at break even and see it fail all the way back down? That's the big tipping point. And right now we're right at those highs where it's right there. We've got to make that decision. Are we going to hold this shorter term range here and kind of create a balance for a little while around this 18,000? Or are we going to go screaming through the top? The obvious problem is that we have a nice bull channel. It's very well defined, and we've already come off the highs of it. We still haven't come down to the lows of it. And realistically, what would be probably the best benefit for buyers to show the most amount of strength is not to break out yet. And I know that sounds counterproductive, but hear me out, right? What I would love to see here is the buyers to go maybe just a little bit further. Hit the highs of it and form a 3-press top. That's going to get breakout buyers stuck in at the highs. Then we see the vindictive part of Bitcoin, which we all know too well if you've traded it for longer than like 3 seconds. We see it flush back down to the lows. And it looks like the market's falling apart because it's a big move down. But, right, from this perspective, where has it gone? Nowhere, right? The market's gone sideways. It's done nothing until we've gotten to the bottom of the channel. And that's where the buyers are going to want to strike, because that's the zone of the most interest. If we can get shorts stuck underneath this bear bar and also allow the earlier shorts to get out at break even, that's everybody doing the same thing at the same place for all different reasons. And that's really kind of the perfect storm. So that's what a lot of buyers are really going to be hunting for, is that scenario there. Obviously, the perfect storm only shows up every once in a blue moon, so we've got to be prepared for other scenarios too. If the market wants to go ripping up through the highs, that's fine. We're going to be challenging those all-time highs and probably pushing in towards where a lot of people would be getting out at break even. If it can break above the wedge top, right? So if we have a little bit of an upward, actually, let me do it like this. If we have a continuation up and it starts breaking up towards the 19,500s, 20,000s, if it squeezes, right, and starts pushing through the 20,000s, it would not be unheard of at all to see it squeezing into the 21, 22s. We know how Bitcoin can get. It wouldn't be a surprise to see it squeeze up to 25,000, right? Realistically, big, giant psychological level, 20,000, then what's next, right? Oh, well, 25,000. That's the natural next thing that people are going to be looking for. And it's not that far away. I mean, it sounds crazy, but we were just at 12,000 at the beginning of November. Well, guess what? We're at 18,000 now. So seeing it go another 4,000, 5,000 in another month's time, that's not that unheard of. That would make sense. So that's scenario one, right? Well, the scenario I want would be scenario one. We're buying it down here. But if it screams higher, that's the squeeze. Now, if we get back to the highs and they fail, right? They try to get going and they hit that 20,000 and it hits a brick wall, that's where we start seeing the potential flush. Right, if we get that big flush back all the way down to like the 15,000s, we could see a big washout, giant washout to the 15,000s. I'm not saying it's crash time, but I'm saying that's where the dip buyers are going to be stalking this thing. Please come back. Obviously, there are going to be some massive buyers at around the 17,500s, given all of that congestion from before. But if we can get a big washout, that big flush down there, that's going to be a big point of interest. All depends on how the market wants to respond up here. Are they going to fail, or are we going to get the boosters going and really start screaming this thing to the upside? I would love to see this thing screaming to the upside. I miss Bitcoin when it was in the rocket ship phase, and it feels like we're starting to come back into it. Man, I would love to see it scream back up again. All right, and the first stock on the list for this week is Apple, AAPL. I know, John, what a cop-out, picking Apple again, right? But Apple is in a very interesting scenario, right? Apple going into the holidays, obviously a lot of people are always going to be looking at all of these tech sectors, the Apple and things like Walmart and Amazon and Roku and anything that has a physical product that they can sell a boat ton of going into the holidays. Right? Black Friday, well, guess what? It's going to be like Cyber Friday. Nobody's going to be out shopping, especially when everything's shut down. So it's going to be like a cyber weekend at this point, which means that all of those big names like that, Apple and Amazon and any of those are going to have a huge influx of volume because people are going to be buying into them. That might not happen this week, but this is when you start trying to pay attention to that. And we've got this big, beautiful wedge that's setting up here. And not only that, but this one really is interesting because we have this negative divergence on the bottom where the MACD made a lower low, but price made a higher low. And that's what's forming this wedge. And notice that price is having a very hard time here creating a secondary wedge. And inside the secondary wedge, we're seeing more consolidation and a huge bear bar that's been a complete failure. And if we zoom in real close, any shorts who sold below that bear bar, guess who hasn't had a chance to get out of break even yet? Ooh, yeah, right? This is what I'm talking about. I love these kinds of scenarios. So it depends on where we open up, obviously. But going into the next open, if we're opening up towards the top of the wedge, maybe sellers have a shot to push it lower. But if we're opening up above the wedge, that's where things get really interesting. All of those shorts are stuck. And that's where we can potentially get that big squeeze all the way back up towards the 125s, up towards the 130s, maybe even filling in that gap at 131.50. I would love to see if they can get more continuation up towards the 137s to new highs, 140s. Realistically, that would be a logical objective for a big wedge breakout. Obviously, there is the scenario of a wedge breakout pullback, and that pullback area would be a big zone of interest on that smaller wedge, right? Look at where the wedge comes together. That's kind of where you want to see, if you project that forward, where does that line up with the previous falling resistance? And it's right around the same spot. That's perfect. So everything is lining up for either a breakout and just rip or even a breakout pullback. Either way, buyers are going to be very interested on Apple going into the holiday season with the way things are setting up like this. And just as a quick little bonus side note, here is the chart of Amazon also constricting very similarly. We're seeing this on a lot of them. Google, it looks like a beautiful bull flag. Just keep an eye on these sectors going into the holiday season. And the next stock on the list for this week, APPN. APPN, APPN? APPN Corp, I'm pretty sure that's how you pronounce it. Used to be a really decently priced stock, $45-50. Well, that's not the case anymore. It's now squeezed all the way up to 125. So with this monster squeeze to the upside, obviously shorts are stuck. I don't think we even need to look at the volume to see that. It's pretty obvious. And with this move up, this is one big thing that stands out. This gap higher is on earnings. So not only is it just, a big gap up and a squeeze, this is a big gap up on earnings, squeezing higher and closing at the top, right? That's as big of a power punch as you're going to be able to get your hands on. And we see this really, really shallow pullback, one bear bar pullback, inside bull bar, immediate breakout to the upside, and it's been nothing but bull all the way up. Buyers are going to be looking to pull back into this and not necessarily wanting to buy the high, looking for shallow pullbacks. The next zone of interest, 115, 115.37 specifically, but the 115s, even below the previous bull bar. I mean, there might even be some buyers just to fill in the gap up there at the 120s. I would really prefer to see a deeper pullback down to the 105.20s, even sub 100 if it's going to be a quick little flush. A quick little pullback ends up being a bull bar or something along those lines. That would look really, really nice. But 115.37s, the 115s, all the way down to 105s, that's the hot spot. And a lot of buyers are going to be looking to really pressure that market to the upside to get another continuation push and see if they can get this thing ripping back up to the 130s. Big psychological level 150s, right around the corner. We'll see how much this thing can squeeze. And the last one for the week is going to be Kirk, K-I-R-K, Kirkland, setting up some very interesting price action. Now remember, this stock, if we scroll back a little bit, was a dollar stock, right? This is $1.70, 60 cents in May, and then in June started creeping up above $1. Well, now it's trading at 13. The big thing with this is just the pure amount of pressure to the upside. Every time when you see these little penny stocks, or that used to be penny stocks, there's going to be a huge amount of short interest in them because most of them fail, right? Let's be realistic here. You see these squeeze up from 70 cents up to $3 and they dump all the way back down to 2 cents and everyone gets obliterated except the shorts if they were lucky enough to get some shares. But in this case, it's not, right? It's not pulling back. If sellers were in short and they got squeezed all the way up into the 13s, if there were still shorts who were building in to get out, if they were able to find any shares up there, then chances are they got out at break even on this dip lower. That would be the logical thing to do if they were stuck that badly. But now that they've had a chance to get out of break even, or at least the big money, quote unquote, hasn't had a chance to get out of break even, we're starting to squeeze it back up towards the highs. It missed the new high, made a lower high barely, and then sunk back down and created a beautiful two-legged correction back to the bottom of the wedge where the buyers are now picking it back up again. And guess what? We're right back at the highs, and we closed above that $13 mark, above the wedge highs. That is a huge deal. Now, it really depends on where this opens up, because if we open up back down here, if it's high, right? I mean, if it's like up here, then buyers might buy into it to try to get the follow-through break. But if it's opening up down here, maybe around the support, maybe buyers give it a chance, but you can really see the strain on that. If they're going to give it a shot, it's probably just back to the inside of the wedge. They're going to have a lot more work to do up there. And if it's gapping up at the bottom of the wedge, totally different story. Now buyers have a reason to buy cheap. If it's gapping underneath the wedge, even better, right? Buyers can buy really cheap. But the problem is if it's opening up down here, the one caveat that we have to stay concerned about is that a lot of buyers will have bought into the end of that expecting it to gap up into the weekend. Which, if it does, it's probably just going to go screaming higher. Cool, more power to them. But if we're opening up down here, and all of the buyers were in long here, if they buy and it's not holding, then we're probably just getting out of break even, and we see this go collapsing all the way down. So this is a big, big potential runner, and we could see this squeeze all the way up into the 20s. But if it fails to go up here, right, a failure to launch, we could see it drop all the way back down towards those $3, $2 where it was before. This is definitely on the riskier side of things, but where there's risk, there's also a lot of potential, something to keep your eyes on. All right, well, that's going to do it for this week. Stay safe, keep those stops in play, and let those winners run, like we always say. And of course, keep in mind, we're going into a holiday weekend. Make sure to take some time, right? Take some time to enjoy the family and be thankful for the season and, and all of that fun stuff. So get some mental breaks going on this week. If you are going to trade this week, be careful. Might be a great week. It might be a mess. So just stay safe, right? Stay safe. But that's going to do it. Hopefully you all have a fantastic week. Hopefully you all have a fantastic holiday if you're taking the week off or a couple days off. Enjoy it with a family and friends if as much as you can, maybe virtual or whatever, however this one ends up. And we will see you all tomorrow in the Daily Brief. All right, have a good one, and we will talk to you all later. Thanks.